Usually I've got a good dad joke lined up somewhere in there. Trying to think. Girls and I were going over a bunch of them this weekend. Oh, what do you call it when a ghost uses the bathroom to go number 2? I don't
Wow.
know.
I don't know.
Spooky dookie. Yeah, tell that to your kids. I mean, anything
That's
bathroom related,
good.
your kids will giggle at. So,
Yeah, they will like that one.
yeah. Hey
They will
guys,
like that one.
Aaron Cochran, by Tennessee Dirt Team Lead. I'm here again with Bryan Johnson, our preferred vendor, our preferred lender with Primis Bank. We are going to talk election today. Lots of questions around it. We've got opinions on what's going to happen, what could happen. And just to set a disclaimer with you, I saw an article earlier this week, and it said if anybody has a definitive answer on what's going to happen with this upcoming election, either they're lying to you or they have money to be made because of the answers they're giving you. So take that out of context. This is just our opinions on what we foresee could happen. As you know, we're in an ever-changing environment, and anything could happen at any point in time. But based upon our professional knowledge, this is what we predict happening. So, Bryan, thanks again for being with us today, and looking forward to you dropping some knowledge on us from the banking world.
Thanks for having me. Excited to have another great
Yeah.
conversation.
So, let me get my notes up here. So, one thing I want to talk about, I always talk about Bryan and lending and all this type of stuff about you being the big bad wolf. How are current regulations in the lending world set up so that it protects the consumer? How are they protected from price gouging with either fees or writing an offer that's just absurd, and getting a loan on it, things like that? And then maybe how are they vulnerable? Can you talk on that a little bit for us?
Mhm. Yeah, there's a lot to unpack there, because there are some questionable lending practices out there still today.
Yeah.
So, but there are a lot of guidelines, and you can't just charge extra fees. A loan can fail the fees and points test. Like if there's too many points and too many fees, you also can't just add and change a lot of fees that were disclosed on the front end. There's a closing disclosure that legally has to go out prior to closing, 3 days prior to closing. Back in the day, that didn't have to happen. So some people were just absolutely surprised going into the
Yeah.
closing, going like, whoa, what
Hey,
is
if you've never
this?
seen this, if you want the keys, you better sign here. And it's pressure, pressure, pressure,
Yeah,
pressure.
which is wild. So the consumer is protected, but at the same time, the buyer and the consumer still needs to do their due diligence. Like you mentioned the other day, like if you're talking to a police officer, like, so, hey, what does it look like to get in a bad situation? Like, how can I prevent it
Yeah.
ultimately? So I think when you're buying a home or talking to a realtor or lender, I think it's good to just have those conversations early. I would say get a loan estimate in front of you. And that's what we try to do. Like, here's the loan estimate. This is what it means. This is what it looks like. There's a lot of different fees and items, and just educate yourself around what that looks like, because you may buy 5, 6, 7 times in your lifetime, and it'll be easier to compare with other lenders. And you can start to see, okay, they promised me this rate, but I'm literally seeing $12,000 in
Right.
points they didn't mention.
We've seen some
Um,
astronomical closing
so
costs as of recent. They said, hey, the payment's right, everything's right, but I need you to get Aaron. I need you to get $20,000 of closing costs to make this happen on a $300,000 loan, which is absurd.
mm, yep. So it's easy to just, I think some people do sweep things under the rug and don't fully explain what's on the loan
Yeah,
estimate and what's on the fee sheet. So as a consumer, as a buyer, I would just say have those conversations, get pre-approved early, but just start to understand what it is. And you want to trust the people that you're working with. But at the same time, it's still on the buyer to understand what you're looking
yeah,
at and understand what the fees are and how they're broken out. But there are a lot of guidelines where the buyer is protected.
yeah, and that's well above our pay
And
rate as agents, but we're cons- we're we should be able to, as agents, identify an inflated number. Like when I see $20,000 on $300,000 come in, I go, and in that scenario, I just turned it to you. Hey, Bryan, what am I missing? Something's off here. and I've never had to write a
Mhm.
contract this way. What is it? What am I missing? And then you were able to unpack that for us because, you understand what you understand what the undercoating and the extended warranties and all the extra junk that the other finance guy was trying to
Yeah.
pack into it.
Yeah, and I think that's another benefit to going local, to
Yeah.
working with local people, because our reputation matters, our reputation is on the line, and all the more reason for, we better be good at what we're doing and take pride in what we do, or else we'll be out of
Yeah. You're
business
you're
very
talking local
very
when you
quickly.
mean
Well,
when
yeah,
you talk local, you mean somebody, hey, I can go to their office if I wanted to. I can have them meet me. I can put my hand in their hand and shake hands, look them in the eye and say, "Hey, I want to do business with you." You know, very
right.
traditional Tennessee
Yeah.
practices, right?
Yeah, I think that's important. I've seen the lenders that are maybe they're in California and they just don't really care because they also know if the deal blows up because of them, no one even really
Yeah.
knows them, no one even sees them, and there's a
They
lot
don't
less
they don't have a
accountability.
reputation at hand, or if they have a giant name above their name, they're just gonna fall into the shadows and it'll never impact them.
Right,
So, yeah,
right. But again, as a local team, Aaron's gonna say, "Hey, red flag." Title company's gonna go, "Hey, red
yeah,
flag." I'll say, "Hey, red flag." So if you work with like a lot of local people, it's gonna be hard to get yourself in a bad situation because we're all looking out for that person, and we all will call BS for lack of a better
what's the
word
largest thing
if
that you see is
anything.
inflated on a loan estimate? Like, where do bad lenders or dishonest lenders try to pack that heavy?
Yeah, so I would say it's not necessarily
Okay,
inflated. It's they're not even including enough closing costs or prepaids or escrows, meaning they're making their closing costs look a lot less, and they're just quoting an interest rate that probably does have a big cost associated
mhm,
with it, but you don't even see that cost because the rate's not locked. So it's not even that it's inflated, they're just over promising, under delivering is what
okay,
it is. And that's where people will look at a loan estimate and be like, "Well, this is what they quoted," and I have to sit there and go, "Okay, look, there's some lender fees we can compare." But just so we're clear, no matter what lender you work with, by the time you get to the closing table, the closing cost, like the prepaids and escrows where we're collecting for taxes and insurance, that will look a certain way no matter what.
yeah,
So just because they quoted a lot less on the front end, it's wrong, and it will be X.
correct,
So I do think a lot of people will ballpark low just to make their numbers look good when in reality, like it's prepaids and escrows, like when we collect for insurance and taxes, I mean that those are what they are.
right,
And it'll be higher. So I think that can happen a lot. And then you have to compare, like my loan estimate could be higher because I'm trying to give them an accurate
right,
number. And I'm trying to get them to
right,
like understand like I know this is higher, but theirs will be higher because they haven't added enough
right.
prepaids and escrows, and so anyways, there's a little
And
bit
we've
of
talked about that.
a back and forth
Yeah, we've
there.
talked about that in the past of, one reason we really like using you and your team at Primis Bank is because you try to underpromise and overdeliver. Your numbers are more inflated. If we need $120,000 a month for homeowners insurance, you may be packing it at 150 just to be safe. Because
Mhm.
that final loan disclosure that's going to come out 3 days before closing is going to be the accurate numbers. And it's easier to express to somebody, hey, your payment's going to be $2,300 instead of $2,600 because
Yeah,
you accurately.
and I think this is why we've all talked to friends and family that were like, "Man, my purchase, it was crazy, and it was frustrating, and my numbers changed a
Yep.
lot," and it's probably because someone ballparked really lean and way too low on the front end, and then when things were actually corrected,
Yeah.
it it was higher. So I try to explain that to people on the front end, but some just have to learn the hard way. Um,
Yeah.
but
It's the car salesman calls you and says, "Yeah, come in, we'll give you whatever you want for your trade, but I gotta see it." And they come in
mhm,
there and they don't get what they want, and next thing you know, they're at the table and they got their keys, and you can't go nowhere because you're so far into it. You've already paid for home inspections and everything else, trying to switch lenders midway. Can you get it's It's a nightmare. So, well, good. That gives us good insight. I read another article. Some people have been talking about in our industry about Kamala Harris. Um, if she wins the upcoming election, that she has a 4-year plan to lower housing costs. One of which things include a $25,000 down payment assistance for first time home buyers. She says this is designed to spur the construction of new homes, including tax incentives for building starter homes. How do you feel that that's going to, if we just start handing out free money, which I mean, somebody want to write me a check for $25,000, I'm going to take it. If I had the option to buy as a homeowner and get an extra $25,000, I'm going to take it. But what's this going to do to
Mhm.
the environment around us? Is it going to make it more competitive? Is it going to wash me out because now, well, now as a seller, I'm going to raise the price of my home because you're going to get 25 grand.
Yeah.
There's free money floating around
Yeah, it
here.
could yeah, it could play out a few different ways, and I don't know the full details of her policies and what she's
Right.
presenting, but, I mean, there is a problem when it comes to first-time home buyers and their purchase power, and whatnot, so they do need some help. I don't know exactly what that looks like. Do you have to pay that back? Um, what do they deem a first-time home buyer home? Like, what purchase price? I mean, it could be a good thing, but Tennessee again is a unique state where we have THDA. Like, not all
Right.
states have that, so we already have access to up to 15 grand for that. So I mean, we already have a pretty strong
Well, even
program,
if we're
but
running a USDA loan, which is already in place, it's already government backed, zero money down.
mhm, mhm,
Even VA loans, you know,
yep,
packing that on top of something like you said, THDA here in Tennessee and getting additional down payment and closing cost assistance and all those types of things. They're already in place. We don't have to wait for a 4-year plan to roll out in order to get it. So it's
right,
here and people are still not using it. And you would still have to qualify for it. So not
right,
just being a first time home buyer, like you still have to have minimum credit scores and minimum incomes and all these different types of things. And it most
right,
likely would roll out into it would most likely roll out into the same things like THDA would be anyhow, which would have income limits. So,
right.
if you make
Yeah,
$400,000
so
a year, and you're a first time home buyer, you're probably not going to qualify for a first time home buyer credit of $25,000.
right.
So,
So we'll see. It could be a good thing, but again, it speaks to the bigger issue of housing affordability is just getting worse and
yeah,
worse. And when you look at inflation and when you look at the dollar being worth less and less, the only way to capture or stay with that or stay ahead is to own
yeah,
assets like houses. Because those are the people that made a lot of money if they owned homes and their equity just went way up on their home. So that's the counterpart to inflation and the dollar being worth less is things like homes, the value's going up so you can capture that equity. So
right.
anyways, that's a big benefit to just getting in the market and at least hedging your bets against inflation with the housing
Yeah.
market, in my
Home
opinion.
prices don't go down drastically. And if they do go down, they don't go down far and they don't sit low. I think we're past a lot of
Mhm.
those major recessions that we've seen over the decades. Um, that's just my personal opinion. But the big topic, in our office and on online groups and things like that is, and Nashville was even called out in this list. So New York, Los Angeles, San Francisco, and Nashville. I mean, some of those other markets are already there, but people can't. The cost of living in those markets are so absurd that it's not sustainable for people, especially a first time home buyer.
Mhm.
Even if I gave them $100,000 to go buy a house, it's not realistic to continue to make that payment or even to
Right.
buy into that market. So if you're not buying into that market now, that could impact your abilities to buy in later. Um,
Mhm.
certain generations are already complaining about not being able to, never being able to purchase a home, and we're not even in it yet. But what's going to happen is
Right.
people are going to want to move to Tennessee, which they're just crawling all over the place here right now. Cassandra
Right.
has run into two sets of families just out and about. Hey, I'm in town. Are you a realtor? Just driving around. I'm looking. I'm trying to familiarize myself where I might want to look. I'm not working with anybody yet. Like just out in the blue.
Mhm.
Like that's insane. So
Right.
not I'm not even talking like Zillow or Realtor or anything like that. I'm talking just out and about, come across her standing in the front yard of one of her listings, adjusting a sign and going, "Hey, I'm here from Texas." What?
Mhm.
So so these people are coming in and they're going, "I want to move to Tennessee," because everybody thinks Nashville's Tennessee, right? They Tennessee,
Right.
this little blip, the subculture is Tennessee. Um, so they can't live there. So what's going to happen? And we're even seeing relocations from Nashville and Murfreesboro and stuff like that to submarkets like where we live, Tullahoma, Estill Springs, Winchester, Fayetteville, things like that, that are starting to boom right now. Prices are starting to go up, and we have a ton of buyers rolling through our area because they can't
Mhm.
live there. And we still have, virtual commutes for people. So people can still work. There might not be a ton of opportunities down here for those people, but worst case scenario, they're driving an hour. I think Brian, you would agree that you drive an hour pretty much anywhere. You can drive 10 miles in Murfreesboro for an hour, or you can drive 50 miles to
Yeah.
Tullahoma in an hour. So
Mhm.
it's interesting. So yeah, so free money possibly coming down the pipe, um, depending on how the election goes. What is your experience? You've been in the lending industry for a little while. Decreased interest rates driving buyers back to the market, but causing prices to climb retroactively or
Mhm.
respectively. What are your thoughts on
Mhm.
that? How have you seen that? What do you, as we see those interest rates, on the other side, Donald Trump thinking that he can push interest rates to the ground, which,
Right.
I don't think he can make that happen. I don't think anybody can make that happen in 4 years. Um,
Yeah. No, that's a good yeah, that's a good question. So you start to look at a few different things, and I was looking at some graphs and stats recently from someone on our team, but you get to 5.75, 5.5%
mhm.
interest rate, and a lot of uh, buyers, people that already own, essentially start to get unlocked, meaning rates are lower than probably what they currently have. So, anyways, the lower the rates get, there's just so many people on the fence right now. There's probably 10 people on the fence for every current
Yeah,
buyer. So I just think once we get, obviously the rate's lower, but I think we get to 5.5 or get below that, and it starts to unlock a lot of people. There's people that may have a 3% rate, but they've had it for 3 years or more, and they're kind of tired and they need to upgrade, they need to move. And so there's a lot of people on the fence. That's going to create a lot more buyers. There's still not going to be, we can't just create all this inventory. So there's still going to be probably not enough inventory. So when there's not enough inventory and there's all these buyers now flooding the market, I mean, prices are going to be pushed up because there's probably going to be some maybe slight bidding wars, things like that. So prices can't go
right.
down. Like they can't go down in that situation. That's just basic math, basic economics, and whatnot. So um, as rates come down, and they're still projecting and anticipating two additional rate cuts this year, 25 basis points each, and I think four Fed members just said that yesterday, that
In
they're still
2024.
anticipating that in
Okay.
2024. And then next year there's going to be more. So, um, will rates get to 3% or lower? Maybe not, but we don't. I think just getting them to 5.5 or 5% is just going to unlock so many buyers. It's just, yeah, they're going to flood the market, and then ultimately that will push prices up more and more.
Yeah, I
So
kind of I kind of
that,
result it as like refer to it as like a tornado that's come through. And
mm,
yeah, will the tornado pass? Yeah, it'll pass, but it's going to leave a wake behind it, and you're going to know it came through, and you're going to be looking at some garbage, in my opinion,
hmm
of what you could have gotten if you just got into it while the tornadoes around you. So,
Yep.
and it's
Yeah, I mean, this was more of a refinance chart,
yeah,
but it's the same for purchases. But again, if you were to get to 5.5% with the interest rate, 7.2 million mortgages, homeowners are in the money. It just means based on where their rate is, they're in the money where it would probably make sense to refi or
right.
purchase. 7.2 million. So, anyways, so there's some math here that just essentially says a lot of people get unlocked, where some may refi, but ultimately, like a lot of people are going to jump back in to purchase and move. And so I think next year is going to be it'll be interesting. We'll see. I mean, we've got to get through the election, see how that pans out. But life goes on. I mean, life is still going to go on. People are still going to buy
Yeah.
homes. We'll see what rates do.
Well, we talked
But
about, I mean, you and I, before we hopped on today, we talked about record months, and you were talking about this is what, October or September is going to be a record month for you. And same for our
mhm,
team. Our team is just going berserk right now. And it's not a matter of a slow market. What I'm seeing a lot of is um, I'm seeing people that are getting. We're in a now society. We can all agree upon that. I want it, and I want it now. You know, like that little girl on Willy Wonka, stomps her feet. She wants the big egg.
mhm,
Yeah.
yeah,
So everybody's like, I want. I'm just tired of it. Oh, I'm gonna hold off and wait till the interest rates drop, and then they're super uncomfortable. So we're seeing homes come back to market that weren't ready 3 months ago because they're going to wait. They're going to wait for everything to get better. And then they're like, I'm not going to wait anymore. This is ridiculous. So then they're going to go back to market, and they're still going to think what they can get 6 months ago. So they're really high, and they're sitting on market longer now because the people
mhm,
can't buy them because they can't go to that $2,800 a month. They want to be at $2,000 a month. And you're having buyers that are just jumping off the fence. Hey, I don't want to wait anymore. I'm tired of this. My landlord pissed me off. You know, all those different types of areas. We've seen it all. It's come across
mm,
both of our
right,
desks simultaneously about people uncomfortable. And it's just, hey, I'm ready. I'm done. I want out of here. A lot of relocations.
mhm,
Florida, Florida and Illinois right now are my two hot
mhm,
spots. California slowed a little bit. We've got some Californias coming out. We've got some Colorados, some Floridians, I guess we can call them. Washington
mhm.
State. People are still coming to Tennessee. So, uh,
I mean, Tennessee is a great state. I mean, it's very affordable. I know Nashville can be expensive, but there's still a lot of opportunity here when you look at income tax, when you look at property taxes, when you look at all these things, it's very affordable. Even if you move and get the same purchase price that you're selling in Washington, I mean, the property taxes alone may be a third of what they're currently paying. So Tennessee is just it really there's a lot of opportunity. It feels very efficient in terms of living here and your money going
yeah.
further. Your mortgage payment's probably going to be a lot more efficient, a lot lower with the lack of some crazy property taxes like you see in Texas and some other places. I mean, so anyways, it's Tennessee's a great state. It's continuing to grow.
Well, and
Um, a lot of
I
opportunity
was
here.
talking with a mutual client, our Colorado clients, the other day, and they've lived everywhere. I mean, they're military, and they've moved all over the place. And we were talking about there's some states that are designed for great opportunities. You know, there's opportunities in California, there's opportunities in Colorado, there's opportunities in New York. But these states aren't designed for retirement. So there's states that you live in that you make your money, and then there's states you move to make sure you keep it. So one
Yep.
scenario Cassandra and I paint to a lot of people, it's, they ask, well, why'd you move from California and things like that? And even just if we just get into the finance side of it, between our vehicle rate, now the home that we live in now is very similar, size wise, payment wise, everything. We just have more acreage, and more freedoms to do what we want. But between our vehicle registration in California, two vehicles and a fifth wheel, um, apples to apples here, our homeowners insurance, our property taxes, and our state income tax, not federal, just state income tax. Those items there, we're able to make 12 mortgage payments here, including our property
Yeah.
tax payment,
Yep.
which is insane. So if I put all those, and I'm still paying with those numbers, I'm still paying all of those same insurance. I'm still paying vehicle registrations. California, $3,500 to register those 3 vehicles. Here, $35.
Hmm.
It's insane. And it takes me 2 minutes to do
Yeah.
it. I don't have to take an entire day off of work to go do it.
Hmm.
So we talk about strategic relocations, logical thinking. Hey, I'm going to move here for X number, X and Y and Z financial freedoms, right? We're
Hmm.
seeing a lot of that, but we're seeing a lot of emotional moves now. And you're going to see that in an election. You may or may not disagree, but we see the knee jerk reaction. Trump wins. I'm moving out of the state. I don't want to be around these people. Kamala wins. I want to move out of the state. I don't want to be around these people. It's knee jerk reactions and emotions that are going to things, and nobody's going to care what the interest rates are. So if you're sitting back here as neutral, like myself, and you're sitting on the fence going, I don't know if I want to buy a house, the flood's coming.
Hmm.
And you better get off the fence and you better find a house that works for you. Look now, because you're about to be inundated with stuff. So
Hmm.
lots of things impacting things
I agree.
here. Early voting going on, interest rates fluctuating. Interest rates have gotten worse recently approaching the election. We talked about rates floating
Hmm.
upwards as of recent, and it could just be a temporary blip like you talked about, and they'll most likely come back down and balance out. Everything ebb and flows. I'm trying to think how to get refrigerator buddies worked into this conversation. Go watch your other videos.
I don't know.
Sorry, inside joke.
Yeah, I mean that things do ebb and flow, though. I mean the markets, the interest rates, everything ebbs and flows. I mean you can try to time things as best as you can, but you just have to release it to a certain degree and realize like no one can time anything
Yeah.
perfectly, whether it's the stock market or
Well,
housing
let's
market.
let's talk briefly before we wrap up here. Let's talk about a current scenario that we have with another client. We'll keep names and everything out of it, but we're trying to. They're a payment client, right, Brian? They want to be at a
Hmm.
payment. They're qualified for
Hmm.
more, but they want this payment. And we're talking about rate buy downs, offer off how much we're going to write the offer for on this home that they've fallen in love with. How far do we buy the rate down? What buying the rate down means? Um, Down payment, because they're going to sell their other home and they're relocating locally here, just to let you know that. And and closing costs, and how do we negotiate that? And ultimately, we've worked all the numbers and we can't get to that number. I think we can put
Hmm.
the number $2,300. Trying to get to $2,300. If we didn't do anything, we get them a full price offer. We put down what we're planning on putting down. We're at $2,600.
Hmm.
And what were some of the numbers that we went over? Like, it was absurd numbers on what it would cost to buy down the rate enough to get
Yeah,
down to the
I mean it was.
2,300, and they would probably
Mhm.
still refinance in 6 months. So how does that work? How's that buy down work? What's that look like if you're going to refinance in a short period of time?
Yeah, we were looking at a permanent buy down. I mean, it was pushing $20,000 at one point to just get the rate low enough to where we could achieve that payment, and that's just a one time fee that you don't get that
How
money
much?
back. So if you refinance a year
How
from
much did you
now,
say?
yeah, this one scenario was
Yeah.
20,000. Remember?
Yeah,
So
$20,000 to lower your payment
yeah,
$300.
which I don't typically recommend. I'm not, but I'll run the numbers and whatnot.
Yeah,
But that's where you just have to take a step back sometimes. And because again, if you refinance a year from now, I mean, all of that's null and void, and you don't get that $20,000
right.
back. So um, sometimes it's just making sure we're looking at this from a few different
Yeah.
angles, even though monthly payment obviously is very important, but we also don't want to ultimately cost you $20,000 if we just refinance a year from now, because ultimately that's what you're doing. You're costing yourself that much money. So again, to each their own. Everyone's different. Everyone has different goals, and they want certain things, which is important. You have to listen to that and figure out how to come to a solution, but also be very, very blunt sometimes and go, okay, look, the cost is $20,000. It doesn't, it's not mathing, but
No.
if it makes you feel good, I mean, we can do that, but you're going to lose if, hypothetically speaking, we refinance a year from now, you're going to lose all that money.
I
So
if I'm going to save
maybe we don't
Yeah, if I'm
refinance.
going to save $300 a month, I can make, instead of spending 20 grand to save 300, I can make the
Mhm,
next 67
mhm,
67 $300 payments
mhm,
out of that. And if I refinance any earlier, I save the difference.
mhm. And we also looked at like, well, actually, this is another client, but I have another client. I was like, all right, let's just back our down payment by $20,000. You have a car payment of $600 a month.
Yeah.
Just pay the car off. So we're putting slightly less down on the house. It's going to cost you like maybe $100 on your monthly payment, but we're removing a $600 debt over here by removing your
Right.
car. So that's where we just try to take a step back and look at the total cash flow for that family
Right.
ultimately, total debt load, and just try to get that light bulb moment of like, okay, that doesn't quite make sense, or this does make
Right.
sense.
And
Um,
I love payment clients. Hey, I need to get to this payment. As long as it maths, you know what I mean? As long as it all adds up and we can, because it's, I mean, we can move numbers. You and I can talk numbers all day. How do we do this? If we do
mhm,
this, if I push this button, what does it do? If I turn this one turns the red light on, that turns the yellow light on. If I push them both together, then it makes a different color.
mhm.
So I love those scenarios because there's no emotion necessarily in it. It's just factual information, and sometimes it just makes
Yeah.
for a different type of transaction. So
And then again, you can take a step back and paint that picture of like, all right, this is what it looks like to buy now. But again, if rates come down next
yeah,
year, like we think, this is what it could look like buying next year, which ultimately may cost you more with your monthly
because you're
payment,
not getting the
and you'll buy
concessions.
the house. Right.
Yeah,
So it's just,
and you could be writing an offer against
um,
two other people.
yeah,
Yeah, it's
yeah. So but again, like, and we're good at this, but again, and I tell people, I'm like, look, I promise I'm not just trying to sell you to get a deal in the pipeline. I'm
yeah.
not. Like, you could not buy, and that's totally fine. But let's just play devil's advocate and just look at all the
Yeah.
different scenarios, because I think that's important to do that, to better understand if the decision you want to make makes sense or not, or if we can tweak it
I
a
mean,
little bit.
Brian, I'm
So,
happy if they want to give me 20 grand. I'm happy to supply them with $300 a month for the next 66 months. And if they refinance, I stop making the payments. Does that sounds fair to you? Because that wouldn't
yeah,
make
I mean, that's
sense to me, but I would do it
right, right,
to help them out.
right, right.
So, well, as we've talked before, we didn't want to make this political. We're not political facing people, either one of us, either one of our teams, and we wanted to stay as neutral as we possibly can. I think both in this upcoming election, I think both people are offering and presenting and proposing, or however we want to phrase it, their game plans for real estate and how they're going to impact it. Realize that that's not their only priority. And as we all know, presidents, no matter who they are, fall short at some point, not covering their entire agenda.
Hmm.
But just realize by implementing things that there are other scenarios, and it may be a quick fix, but it might not be the longest fix, and it might not positively impact everyone.
Hmm.
So just be aware of that. Don't sit on the fence. Have the conversations. Give Brian or I a call. We're happy to talk through it with you or anybody on either one of our teams. And we can talk through your scenario and figure out what works best for you, and at least give you the information and plug through that stuff. So, Brian, anything else you want to add
Yeah.
today?
No, no, that's great. I mean, yeah, we love these conversations around
Yeah.
strategy. We do this. I mean, we just did it earlier today for a couple. So we love that. I think a responsible buyer needs and wants to have those conversations too. So we would love to step in and be a resource for you in your corner to just help you game plan and figure that out. Figure out what that looks like.
Yeah.
But no, this has been a great conversation. Again, we do try to stay neutral when it comes to politics. But the different outcomes do impact our world. It impacts the housing market. So that's why we have our finger on the pulse, and we're constantly reading and researching and making sure we understand how to best guide our clients through that. Um, and we shall
Yeah.
see. We'll just
And no
onward and
matter who
upward.
wins the elections, we will be here to help you escape Tennessee or come fleeing to us
Right.
with our knee jerk
Exactly.
emotional reactions. It happens. I'm sorry, people.
Exactly.
Hate to call you out, but
Yeah.
well, again, Bryan, thank you for everything you do for us and our team and all of our clients. And we look forward to having another conversation here in the very near future. And Bryan's contact information
Yeah.
is in the links below. If you have any questions, don't hesitate to reach out. You guys have a great week.
Thanks, Aaron.
Spooky dookie.
Spooky dookie.